So why is it even important to have a good credit score? I mean, it's your financial GPA, and sure, they're more likely to maybe give you loans, etc. But I want you to ask yourself, do you know anyone on a tight budget? Do you know anyone who could use a few $100s extra per month? Would you like to pay less for your rent or for your mortgage or your auto loans or even different insurances or your utilities? Would you like to retire sooner and with more money in the bank? If so, believe it or not, your credit score has a huge influence on all of these areas. Having an excellent credit score is a huge benefit, and the higher your score, the less you pay. So we're going to show some examples of that and why that is so important here. Again, just to kind of give you an idea of what's excellent and what's not, we have this screen here that shows anywhere from 850 to 750 is going to be excellent. 700 to 749 is a good score. And I would actually say if you have 680 plus, that's where you want to be for most mortgage loans and auto loans and things. If you have 680 or more, then you're going to get some of the best loans. And then if you have 720 or higher, you get the very best, but you'll still get some great loans with 680. Then you have 650 to 699, that's a fair score. 560 to 649 is a bad score, and then anything below 560 is not where you want to be, right? That indicates to people that they don't want to do business with you, and it may take a while for you to improve your score so that you can have access to some of the loans and things that you want. So who is it that actually uses a credit score, and why should we care? If you look at this, there are different institutions that you will do business with that will require them to look at your score and to evaluate if you're worthy to do business with them. So a credit score can determine the rates and eligibility for nearly all types of prime loans. That'd be mortgage and auto loans, etc. Lenders will only give money to people who have shown the ability and willingness to pay the money back. Obviously, if you were going to loan money to a friend and they had a history of borrowing money and never paying it back, you would be less likely and not as interested in lending them money. And so it's the same thing. Scores can also be used to determine apartment costs and eligibility. So not all landlords do this, but some do. I know I have a couple of rentals and I look at their credit, and they require you to meet certain credit score before you can rent their house or rent their apartment. Auto insurance premiums have a huge impact on credit score, and I'm going to show you a slide of that later. Home insurance, life insurance, medical insurance, even utility companies, especially the big ones, look at your scores. And so if your score is poor, then they might charge you more. Many employers will not hire people with poor credit because they think that it's a factor in determining the type of employee they'll be and the commitment that they have and their ability to manage their own life. And so it's something they'll look at, and maybe you may not get hired due to your credit score. So let's look at a couple of examples. First one is auto insurance premiums. This is huge. And so on the left side of the screen, you can kind of see what hurts your premium for auto insurance. I'm going to walk through a couple of these, and also what helps your premium. And so in the white, you can see if you become a homeowner, if you increase your collision deductible from 500 to 1,000, if you bundle your home with your auto insurance, or if you get married, these all lower your auto premium each month. Now, the things that increase your premium, so you're paying a certain premium and then you have a moving violation. It says it's going to add $225. You reduce your comprehensive deductible from 100 or 500 down to 0, which means that they have to cover everything. Well, your premium is going to go up. If you have a not at fault accident, some companies don't raise it, but others on average $270 it goes up per cycle, usually 6 months. If you have good credit versus excellent credit, it goes up 380. And then if you have 2 not at fault accidents, it goes up 465. If you have 2 moving violations, it's 470. 1 at fault accident, 500. You have a DWI, 775, it increases. You have 2 at fault accidents, $1,100 it goes up. Hopefully you're paying, following along here on the left side of the screen. If you add a teenager, which I just recently did, it goes up $1,500 on average. If you have 2 DWIs, it goes up $1,750. And the worst thing of all of them, more than 2 DWIs or adding a teenager, is having poor credit. It raises it $2,090. So that's not good. If you have poor credit, that's the worst thing that's going to increase your auto insurance premium. And so you can see that if you had great credit, you could save a lot of money per month just by increasing or just by your auto insurance premium. Well, what about your mortgage? Let's look at that example. And so this is a $300,000 loan. This is a national average that we used. And so it shows the different breakdown of the FICO scores on the left side for a 30-year fixed mortgage, and then the APR that you might expect. And so the lowest right now, according to this, when we took the screenshot, was 5.7%. And then it increases all the way down to 10.19% for poor credit. And the difference in the monthly payment, the best credit only has to pay $1,746, where the worst credit for the same house, the same loan, the same amount, instead of $1,746, they're now paying $2,676. Guys, this is a difference of $930 a month, or $11,160 a year, just by having bad credit. And you can look down there and say, okay, well, if I had, $650, what would it be? Well, it'd be $2,005 rather than $1,746. That's $250 extra a month that you would have to pay. And so if you can see the auto insurance premium, that's the same with credit cards, it's the same with your mortgage, it's the same with any types of loans, it's going to be more expensive for you. In fact, they did a study that kind of took an average of all of these things we're talking about, auto insurance, the different loans, those types of things, and said on average, if we had 2 neighbors that lived right next door to each other, they had the same number of kids, the same number of cars, the same house and value of house, everything was the same, and one person had the ideal credit, let's say 760, and the other person had 580, they would be paying an extra $1,000 a month to live the same lifestyle as their neighbor just because they had bad credit. So again, if you want to raise without asking your boss, if you want more money in your pocket to pay off debt, if you want more money to invest for your retirement, you need to improve your credit. As your credit and score improves, you're saving $100, $300, $600, or $1,000 or more per month. So to break this down again, the ideal credit 760 or above, you're getting the best of everything. Loans, mortgage, etc., insurance premiums. And then if you're even 720, 720 is awesome, but you're still paying $100 more per month. 680 is $300 or more per month. 640 is $600 or more per month, and 580 or below, you're paying over $1,000. So that should hit home to many of you. And if you're trying to, again, get that raise or find more money in the month, start improving your credit score.